2 years ago, the news that Google entered the arena of banking drew a lot of attention from both the financial and tech worlds. However, last week, it was reported that Google had abandoned its plan. What has happened to make the tech giant give up its ambitious plan? Here's the story: how Google wanted to play the game of finance but eventually folded its cards. First, let's go back to 2 years ago to see why Google entered the game of finance in the first place. While Apple joined the finance game of credit and payment, Google took a different approach. It aimed to cut a slice of the winnings from the debit card game. In November 2019, Google was reported to be planning the launch of a consumer checking account in 2020 in partnership with Citigroup and Stanford Federal Credit Union. Citi is one of the top 4 banks in the US. If a customer of the new Google checking account wants to use the traditional debit card to make a purchase, Citi will be able to easily issue the plastic, leveraging its existing banking infrastructure. Similarly to credit card, debit card also allows card issuers to earn interchange fees from transactions flowing through the card networks. Actually, the aggregated interchange fee from debit cards was so large that the US regulator introduced the Durbin Amendment after the 2008 financial crisis, which caps the debit card interchange fee for large banks. Even though the Durbin Amendment did lower the overall debit card interchange fee significantly by as much as 30%, it's still a $20+ billion industry in the US. Besides interchange fee, there's also account fee, overdraft fee, associated with the checking accounts. These are all revenue sources for the Google and bank partnerships. Although Google probably would promise its offering as a low-cost solution to consumers. However, back in 2019, Google already earned $30+ billion a year. Any income from the banking partnership, Google has to chop it with the lender. Thus, the income would still be relatively small. Besides financials, is there any other motive behind the move of Google? Google generates most of its revenue from the advertisement business, which is based on the data collected via various products. If customers use the new Google checking account to make purchases, pay bills, and send payments to friends, there is certainly a lot more information available to Google, which will help optimize its advertisement display further. For customers, it could be convenient to have multiple Google products to manage their finances. For example, after getting a bill reminder from a Gmail account, the user pays the bill directly from the checking account via Google Pay. If consumers find the suite of Google products helpful for them to manage their finances and purchases in an increasingly digitalized world, the new checking account plus debit card certainly can become a growth engine to draw more users into Google's world. So Google announced its entry into the world of banking back in 2019, based on motives of both financial and strategic reasons. What has happened over the course of 2 years that made Google abandon its plan? First, consumers are increasingly concerned about the far reach of big techs like Google. With a global search engine market share as high as 90%, Google has amassed a humongous amount of data. It knows what you are searching, why you are searching, when you are searching. The same with your viewing behaviors. With advanced statistical analysis techniques, such as data science and machine learning, Google can analyze all the collected data and have a pretty good idea for what you are going to do next, essentially predicting your behaviors. Google probably knows you better than your parents, than your spouse, and than yourself. That's why so many consumers do not want to give big techs another dimension of data, a very important one: the financial data. At the same time, regulators increased the scrutiny of big techs. In March 2021, Google was called upon to testify in front of the US Senate, along with Facebook and Twitter, regarding how they handled the misinformation on the platforms. In July, Google was fined 500 million euros by the French competition regulator over news copyright. In the current environment, entering the arena of finance would give Google another spotlight it does not need. Meanwhile, the competition in the banking industry has lowered the value of the checking account partnership. For example, overdraft used to be a major source of revenue for banks in the US. It's a $10 billion industry. Each overdraft fee could be as high as $30 to $40. Looking at the neighbors in the north, the Canadian banks typically charge $5 plus 19% annual interest rate, which looks like a bargain. The high overdraft fee created opportunity for newcomers to attack the traditional banks. In the US, you have new banks like Chime, who built this business model around the interchange fee and eliminated the overdraft fee. With more competition and regulatory pressure, traditional banks began to dramatically lower overdraft fees this year, or eliminate them altogether. The overdraft example perfectly illustrates that the competition can lower the cost of banking for consumers. For Google, it just means that the value of the checking account partnerships has decreased. On the other hand, the cloud business is growing fast. One research report projected that the global cloud computing business will grow almost 20% every year and become an 800 billion US dollar market in 2028. Facing this great opportunity, Google actually is significantly lagging behind competitors like Amazon and Microsoft. Through calculations, Google concluded that it's not worth pursuing the checking account project while alienating other bank clients for its important cloud business. That's why, after 2 years, Google abandoned its original ambitious plan. It's actually a good thing that Google pivots back to its technology route. At the same time, it continues to be involved in the banking and payment ecosystem as an infrastructure provider instead of a direct competitor. After all, if you are a top producer in the region, you do not necessarily want to open a restaurant to compete with your restaurant clients. This is the story of Google's entry into the game of finance. Thanks for watching.